After meeting all your expenses, paying the bills and rents, all you have left is $500 with you. You would probably be wondering all the time what you can do with that extra $500. Some of us would possibly spend this $500 on buying absolutely unnecessary things. I mean, that's what you should do, right? With the extra money you have? But did you know that this remaining $500 could create financial freedom for you in the future? Hey go-getters, welcome back to The Early Investors, another profitable episode where you can learn how to become financially free. In today's video, we'll be showing you how to invest $500 per month and create financial freedom. Want to become the next Warren Buffett? Stay with me to find out all the tips and tricks to save your hard-earned simoleons. Before we jump into the video, make sure to subscribe to our channel for more business-related content. Having $500 at the end of the month after covering all your expenses doesn't necessarily mean that you should spend this money on things that are nothing but bizarre. These $500 can create financial freedom for you and achieve millionaire status for you, display a little bit of patience and a straightforward investing approach. Did you know that if you match the historical stock market returns over the past 90 years with returns that average 10% per year, then investing $500 every month in your early 20s, then by your time you are in your 50s, it will make your net worth over $1 million in 30 years. Well, 30 years may be a really long time, but it is absolutely worth it. Before I move on, tell you the steps or ways to invest $500 to create financial freedom, you must invest $500 consistently every month without stopping. And it is better that you start investing as soon as possible, starting this month, because you will have the power of compound interest on your side. I mean that your money will end up making more money, and this more money will make you more money, and it goes on like that, multiplying and getting bigger. You know, much like a snowball that is rolling down a snow-covered hill or a road, collecting more and more snow, and the more it collects, the bigger it becomes with speed. Oh, and the snowball in this case is your money. You get me? Anyway, let's go on to how you can invest the remaining $500 every month. The first one may sound a bit boring, but it is quite crucial. With the $500 you have left every month, build up a 3 to 6 month emergency fund. The money used for building up the emergency fund is not for you to spend or invest. This is solely for your own safety. Anything might happen anytime. Your car crashes, some other medical emergency. So, at times like this, when you have to fix your car or get medical treatment, you don't have to depend on credit cards to cover the expenses because you have your 3 to 6 month emergency fund. It doesn't have to be big. You can start with $500 and deposit it in a high-interest savings account. With preferably a good interest rate, you will have enough money to cover you for 3 to 6 months. This emergency fund's whole point is that it is completely liquid and available for you whenever you need it. The second way is rather familiar to you all. We have told you this in our previous videos as well. Some of you might have guessed it by now. Yes, it is opening up a Roth IRA. However, for first-timers, a Roth IRA is a tax-advantaged retirement account that lets you contribute post-tax money, which means your accounts grow tax-free. When you take distributions in retirement, they will be completely tax-free. So, by the time you are 59 and a half, all of your earnings are completely tax-free, and whatever profit you have will also be tax-free. You can use $500 and start a Roth IRA. So, let's say you are 18 and you start contributing $500 to it. Over the course of years, when you are 60, because of the 7% average return, it would be $1.3 million. And the benefit here is that you don't have to pay tax for this amount since it was deposited in your Roth IRA account. The best part is you can withdraw the amount, which is completely tax-free, anytime you want and do whatever you want with it. Now, if you don't want to invest your $500 in a Roth IRA, then you can opt for the alternative to this, which is the traditional 401k. A traditional 401k is an account in which you invest pre-tax money, and when you're at the age of 59 and a half, you will then be taxed when you start withdrawing the money. For example, when you invest $500 every month into 401k, you will be taxed as making $500 less every month. This way, your money will be saving you money up front, which would allow you to invest more and more money than you would have left even after paying tax. Generally speaking, 401k makes sense only in 2 scenarios. First is when your boss offers it, which is called 401k match. In this, your employer matches your contribution dollar to dollar within a 401k up to a certain amount. You are literally doubling your money here with no guaranteed risk. And a 401k match is something you should not pass because this is free money, and who doesn't love free money? The second scenario where 401k makes sense is where you're in a high tax bracket right now and intend to retire at a lower bracket rate. When it comes to this, even if you end up making a lot of money in your retirement, you would have to pay more taxes than you would pay now, and also, if the tax rates hike in the future by the time you retire, then again you'd be paying more taxes. However, this entirely depends on your situation and retirement plans, but I would suggest you take up a 401k match if you opt for this. Now, the fourth one. I feel like this is a critical one and probably an excellent way to use the $500 you have by paying down high interest debt. High interest debt would mean something different for everyone. It may be your unpaid medical bills, student loans, and credit card debts. It can be a real drag when the interest in these is as high as 2 digits. You must pay off your debts at the earliest. There are solid reasons for that. It is a guaranteed return on investment. After you completely pay off your debts, you will have more and more money to invest at the end of every month. Allow me to tell you some best ways, in my view, in which you can put your $500 towards paying off your debts. Organize your debts from smallest to largest. Pay the minimum amounts on all debts. Put all the balance, even if it's small, in paying off the smallest debts. Once you are done with the small balances, start paying off the big ones with the remaining balances you have every month. And repeat this all until finally you are debt-free. This method is also known as the snowball method. While it may not be mathematically optimal, it is psychologically optimal because once you pay your smaller debts, you will have a motivation to pay off the rest. Now, when it is about investing $500 every month, you can also invest on yourself. When you look at the ROI of investing $500 per month, despite getting an interest of say 10%, it won't be too much in the beginning. However, if you invest this $500 in yourself, you have the potential to make a couple of $100s every month. By telling you to invest in yourself, I didn't mean that you should treat yourself with this. I'm talking about spending this money on your education and certification. You can also spend this $500 on getting yourself a real estate license. This $500 you can also use to start up your career. You can attend some events and seminars that are worth and useful to you. Even though it may seem too much, this is always a good idea. The next option for you to invest your $500 is by opening up a taxable account. This is the best option for all those who don't want to open a retirement account or want to get access to their money immediately without paying any penalties or whatsoever. You can open this account to buy stocks and index funds. You can invest all your money without any specific retirement plan and access this money anytime you want to, without having to pay any fees or penalties. But when you go for this, make sure you choose a company that doesn't charge you a lot for trading fees. Vanguard Index Funds and Robinhood are some of the best ones out there. And at last, I hope some of you are looking forward to this. Start your own business. You heard me right, you can use the $500 in starting your own business. This might just be enough money for you to buy equipment for starting or setting up a website. There are plenty of opportunities out there which don't require so much money for setting up. You can start creating content or even YouTube cash cow channels and more. While you may initially not get a lot of return for this, in the long term it would prove very beneficial for you and also just the right way to spend your extra $500 every month. $500 may not seem so much to many people. However, this $500 can potentially take you to a position where you can make $500 every second or minute. It all depends on how you use it. These were some ways you can use that money. And if this video was in any way helpful to you, then make sure to leave a comment and check out our other videos too. See you soon!